What's up everyone, it's Hevie here. I got my new Bitcoin merch on because today we're talking about Coinbase. Coinbase is about to go public in what might be the biggest public offering of the year. Coinbase is a $100 billion cryptocurrency exchange that has played an instrumental role in getting crypto into the mainstream. Last month, they submitted an S-1 filing to the NASDAQ with the intention of initiating a direct public offering, or DPO. Today, I will talk about everything you need to know about Coinbase leading up to this public offering. This is an important video, especially if you are thinking about investing. Today, we will discuss the history of Coinbase, as well as their business model, how they became a billion-dollar company, their method for going public, and finally, the risks they face. So let's jump right into it. Coinbase was founded in 2012 by a former engineer and a Goldman Sachs trader. They began as an exchange, offering users the ability to buy Bitcoin using bank transfers. Throughout their first few years, they raised tens of millions of dollars, allowing them to acquire several companies and expand their product offering. For example, Coinbase was one of the first companies to partner with companies like Dell and Expedia to facilitate the use of Bitcoin as payment. Since then, they have gradually expanded their product offering to include features like crypto storage for institutions, a global exchange, and a platform for developers to build applications and smart contracts. This has positioned them as a leader in the industry and is why they now control a healthy share of the market. According to the Motley Fool, Coinbase currently controls 11.1% of all cryptocurrencies by market cap. Also, the user base has swelled to over 43 million users, which is more than their main competitor, Binance. So now that we know more about Coinbase, let's take a look at their business model and how they managed to generate over $1 billion last year. Coinbase makes money by taking a percentage and/or flat fee from every transaction. These costs can differ depending on your country, so in this video, we will just stick to the United States. According to the Coinbase website, transactions in the US carry a base fee of 4%. However, this fee can be reduced based on the type of service you want. For example, trading cryptocurrencies like Bitcoin to Ethereum carries only a 2% transaction fee. Buying crypto with a credit or debit card carries the highest fee of 4%. Now, with over 192 billion in transactions in 2020, you can probably imagine their fee revenue was significant. And in fact, it was, with them making over $1.09 billion. Those fees mainly apply to retail traders though. 95% of fee revenue came from retail traders, despite accounting for only 38% of trading volume. This is because traders generally use Coinbase Regular, as I call it, which takes the prices from Coinbase Pro and adds a fee on top of it. Most retail traders do not know that Coinbase actually offers two different services. There's Coinbase Regular, as I said, and then Coinbase Pro. Coinbase Pro is a more advanced version of the regular, and it's more difficult to use because it's more complex, and there are different types of orders like limit orders and market orders, and it's harder than just hitting the buy or sell button. So because of this, the people that really know what they're doing tend to use Coinbase Pro, and the more novice people that just want to buy Bitcoin, don't want to have to worry about the inner workings, they just go to the Coinbase Regular. This comes with some drawbacks because Coinbase Regular, as I alluded to earlier, carries significantly higher fees. As I stated earlier, 95% of the revenue came from Coinbase Regular, which accounted for only 38% of all the trades. So if you want to buy or trade cryptos with Coinbase, I highly recommend you use the Pro version. If you don't know how to use it, there are a lot of great tutorials on YouTube talking about the different orders and stuff, but you will save a lot of money, especially if you're trading in high dollar amounts. However, Coinbase does have other sources of revenue, like providing cold storage for institutions, retail banking functions like debit cards. Yeah, you can get a Coinbase debit card, and supporting a platform for developers. Although it should be noted that over 85% of their total revenue comes from trading fees. So this makes them highly susceptible to fluctuations in the price and popularity of crypto assets. So now that we know more about how they make their money, let's take a look at the growth that this company has seen. Coinbase has seen growth in just about every aspect of their business, especially over the last year. As I stated earlier, revenue in 2020 was $1.28 billion. This represents a 130% increase from the previous year. During that same period, operating expenses only grew by 50%, which led to a $322 million profit. Also, their user base grew by 34% and was sitting at 43 million at the end of 2020. These numbers need to be put into context though, because Coinbase's growth is heavily correlated with rallies in the price of Bitcoin. The last time they turned a profit was in 2017, and even then, 50% of their revenue came in just the month of December, when the price of Bitcoin more than doubled. Furthermore, 42% of all the transactions in their history by dollar amount came in the year 2020. So this leads us into our next point, the timing of this public offering. So far, Bitcoin has shot up more than 8x in price over the last year. Hype around the coin is extremely high right now, and we can see this by looking at Google Trends. Also, cryptocurrencies are buzzing in popularity, with new price discovery happening all the time as institutions and the mainstream picks this thing up. All these factors have been extremely helpful in boosting Coinbase's valuation, by some measures, 4x in the last year. As a reminder, they are going public through a direct public offering, meaning no new shares issued. Going public right now means investors and insiders will be given a way to cash out at a very high valuation. Technically, they could cash out at any time, but given all the buzz and hype going on right now, the valuation is so high, it's just a perfect opportunity for them to get the most amount of money per share. So I've mentioned the DPO twice now. Let's talk about what exactly that is. On January 28th, Coinbase announced their intention to do a direct listing on the NASDAQ. A direct listing is like an IPO, except they will not be issuing any new shares, so there will be no underwriter or middleman. This route has many advantages over an IPO. The first is that it costs much less money. Using an underwriter comes with a huge amount of fees, plus other costs like the roadshow and marketing expenses. Also, there won't be any new shares issued, so current shareholders will not be diluted. When new shares are issued in an IPO, current shareholders will have their stakes reduced. An example would be if there were 200 shares in a company and I owned 100, then I would have a 50% ownership stake in the company. If you were to issue 200 more shares and double the number of shares outstanding, you now have 400 shares, but I would still only have 100, which would reduce my stake down to 25%. As you can imagine, insiders don't like this because effectively it means they're losing money. Furthermore, a DPO is faster and simpler. The SEC requires a lot of paperwork to file an IPO. This takes time, costs money, and adds more steps to the process. However, there are also some drawbacks to DPO. The biggest of which is that you do not get to raise new money. No new shares means no money raised. But Coinbase is not a growing startup anymore and has shown profitability, so fundraising is less important to them. So now that we've gone over the business of Coinbase, their growth, and the DPO, let's finish by talking about some of the risks that Coinbase faces. Disclosing things that present a risk to their business was part of the S-1 filing Coinbase submitted to NASDAQ. One of the risks Coinbase cites is the reveal of the identity of Satoshi Nakamoto, the creator of Bitcoin. Although there have been many theories as to who is behind the creation of Bitcoin, no one knows for sure. Another important fact is that Satoshi's wallet holds over 1.1 million Bitcoins, which is about 6% of the supply mined so far. Coinbase states that if this balance were to ever be transferred or sold, it could adversely affect the health of the market. Other risks include revenue declines due to price drops in cryptocurrencies, a symptom of their percent fee model. Also, it should be noted, 56% of their trade volume is in Bitcoin and Ethereum alone, further reducing the diversity of their income. They also face threats from cyber attacks. Although Coinbase is one of the few exchanges that has never been hacked, they hold a tremendous amount of sensitive information on their clients, as well as tens of billions of dollars in crypto assets. Additionally, they are subject to any new government regulations pertaining to the crypto space. Crypto is still a relatively new industry and government regulations have not caught up yet. Finally, Coinbase stated they expect their operating costs to increase substantially for the foreseeable future. This will cost them profits on a quote, consistent basis. I know I just gave you all a lot of information, so let's quickly go over the key points again. Coinbase was founded in 2012 and has significantly expanded their product offering beyond their core business as an exchange. They have over 43 million users and generated $1.28 billion in revenue last year, a 130% increase. The majority of that revenue comes from transaction fees, which makes them highly susceptible to fluctuations in crypto prices and market activity. They will be going public through a direct public offering, meaning no new shares issued and no money raised. Coinbase, as a business, faces a variety of risk factors, several of which are out of their control. So, given all of this information, would you rather own shares in Coinbase or just own actual Bitcoin? Let me know down in the comments below. I hope you learned something from this video. If you did, please drop a like. Folks, this has been Heavy, and I will see you in the next one.